Good morning and welcome to TOITOI Japan Market Radio. I'm your host broadcasting from Tokyo, and today is Monday, February 23, 2026. This show is designed specifically for global investors tracking Japanese equities, foreign exchange, and fixed income markets. With me today is our portfolio manager who focuses on Japan macro strategy. Thanks for joining us.
Thanks for having me. Well, before we dive into the news flow, I should note that Japanese markets were actually closed today for a national holiday. So we don't have live Nikkei or TOPIX data from today's session. However, there's been significant activity in regional markets and some important developments out of Washington that will absolutely matter when Tokyo reopens tomorrow. So it's worth walking through what happened while Japan was dark.
That's right, and I think the key story overnight revolves around U.S. tariff policy and how that's rippling through Asian markets. Let's start with what we saw in Singapore. The Straits Times Index gained 0.5% on Monday, and that seems to be tied to evolving sentiment around the Trump administration's tariff announcements. Can you walk us through what actually happened here and why it matters for Japan?
Sure. So Singapore equities posted a modest but meaningful rally, up 0.5%, and the driver appears to be relief or at least reduced anxiety around U.S. trade policy. Now, why does that matter for Japan? Japan runs one of the most export-dependent economies in Asia. Any shift in U.S. tariff posture directly affects Japanese manufacturers, particularly in autos, electronics, and industrial machinery. These companies have enormous exposure to the U.S. market, and they're also deeply embedded in regional supply chains across Southeast Asia. So when you see Singapore or other regional bourses rallying on tariff news, it's usually a signal that either the policy is less severe than feared or that uncertainty is declining. Both of those are positives for Japan.
And presumably that would translate into how the Nikkei and TOPIX perform when they reopen tomorrow.
Exactly. If the regional risk sentiment continues to improve, you'd expect Japanese large-cap exporters to track higher, especially names with significant U.S. revenue exposure. On the currency side, improved risk appetite typically pressures the yen modestly as investors rotate toward higher-yielding or riskier assets. And for Japanese government bonds, if sentiment is firmer, you might see yields drift slightly higher, though the Bank of Japan's policy stance remains the dominant driver there. The key caveat is that we need more clarity on the specifics of these tariffs to make a precise call.
Right, and speaking of clarity, or perhaps the lack of it, U.S. equity futures were pointing lower overnight amid what's being described as ongoing tariff uncertainty. This is compounded by the market waiting on Nvidia earnings and some important U.S. economic data. How do you read that dynamic for Japan?
This is where it gets interesting because Japan has multiple exposures here. First, there's direct tariff risk. Japanese exporters in automotive, electronics, and machinery could see margin compression if the U.S. actually follows through with higher tariffs. That would slow Japan's export-driven growth trajectory. Second, there's the tech angle. Japanese companies are tightly linked to the global semiconductor supply chain. Nvidia's earnings and guidance will signal the health of chip demand globally, and that has direct implications for Japanese semiconductor equipment makers and tech suppliers. Third, U.S. macro data and Federal Reserve policy expectations influence Japanese yen-carried trade dynamics and capital flows in and out of Japanese assets. So this isn't just a U.S. story, it's a Japan story.
And if U.S. markets do open lower and risk appetite fades, what's your base case for how Japanese assets react?
In that scenario, I'd expect near-term weakness in the Nikkei and TOPIX, particularly in export-heavy sectors like autos and chip equipment. Those names are vulnerable to tariff headlines. On the currency side, the yen would likely strengthen as a safe haven if U.S. equities sell off and risk appetite deteriorates. Tariff uncertainty tends to trigger flight to quality flows, and the yen benefits from that. For JGB yields, you'd probably see modest downward pressure as safe haven demand increases, though the impact would be tempered by whatever guidance we get from upcoming U.S. economic data. Nvidia's forward guidance will be critical here because it sets the tone for the tech supply chain that Japanese firms are so plugged into.
Staying with the tariff theme, there's another angle that's worth unpacking. Bloomberg reported that Trump's tariff reversal is actually being seen as a win for rivals like China and India. That's a pretty significant development. What's the implication for Japan if the US is rolling back trade barriers that were supposed to constrain China?
This is a headwind for Japan, and it's important to understand why. Japanese exporters were positioned to benefit from tariff walls that would have either protected them from Chinese competition or redirected U.S. import demand toward allied suppliers like Japan. If Trump reverses those tariffs, China regains its price competitive advantage in U.S. markets. That directly pressures Japanese manufacturers on both export margins and market access, especially in the American market where Japan runs significant trade surpluses. Think about sectors like autos, semiconductors, and machinery, where Japan was banking on a tariff-driven demand shift in its favor. A reversal undercuts that entire thesis.
So this is essentially removing a competitive advantage that Japan thought it had.
Precisely. Japan had been counting on what you might call tariff arbitrage, where U.S. buyers would shift orders away from China and toward Japan or other allies. If that arbitrage disappears, Japanese exporters are back to competing on price and efficiency against Chinese manufacturers who often have lower cost structures. That's not a favorable dynamic for Japanese margins.
And how does that flow through to markets? Equities, yen, yields?
For equities, it's a headwind. Export-dependent sectors, particularly large-cap names in autos, semiconductors, and machinery, would likely underperform because the market had been pricing in some degree of tariff-driven upside. That repricing could weigh on the Nikkei and TOPIX. On the currency side, reduced U.S. tariffs could lower U.S. inflation expectations, which in turn might reduce Federal Reserve rate support. That could be modestly supportive for yen weakness in the near term. However, if Japanese equities weaken significantly, you could see safe haven yen flows that offset that effect. For JGB yields, you might see compression if risk-off sentiment dominates, or alternatively, yields could widen modestly if the Bank of Japan maintains hawkish guidance despite a softer export outlook. The risk here is that this tariff reversal removes a key structural support that Japan's export sector had been relying on.
It sounds like there's a lot of crosscurrents here. On one hand, you've got regional markets like Singapore rallying on tariff relief, which suggests reduced uncertainty. On the other hand, if that relief comes in the form of China regaining market access, that's bad news for Japan's competitive position.
That's exactly right, and it highlights why context matters so much in trade policy. Tariff relief can be positive for global risk sentiment and regional equities in the short term because it reduces uncertainty. But the composition of that relief matters enormously. If the US is specifically easing restrictions on China and India, that's a different story for Japan than if the US were broadly de-escalating trade tensions across the board. Japan's export strategy has been predicated on being a reliable, allied supplier to the US in a world of heightened trade friction with China. If that friction eases, Japan's value proposition diminishes.
Shifting back to equities, when Tokyo reopens tomorrow, what are the key sectors or names that investors should be watching most closely given everything we've discussed?
I'd be watching the big exporters very closely. In autos, companies with heavy U.S. exposure will be sensitive to any further tariff headlines or clarification. In tech, the semiconductor equipment makers and component suppliers will react to Nvidia's earnings and guidance because that signals end demand for chips globally. In industrials and machinery, margins are already under pressure from yen strength earlier this year, so any additional headwind from tariff policy could weigh on sentiment. More broadly, I'd watch the Nikkei 225 versus the TOPIX to see whether large-cap exporters underperform or outperform the broader market. That spread will tell you a lot about how investors are pricing tariff risk versus domestic cyclical exposure.
And on the currency side, where do you see dollar-yen headed in the near term given all these moving parts?
Dollar-yen is going to be caught between two forces. On one hand, if U.S. equities weaken and risk appetite fades, the yen should strengthen as a safe haven. On the other hand, if tariff uncertainty declines and regional sentiment improves, You could see yen weakness as investors move out of safe assets and back into risk. The wild card is U.S. economic data and what that does to Federal Reserve rate expectations. If the data supports continued Fed easing, that's yen positive because it narrows the rate differential. If the data is strong and keeps Fed policy on hold, that's yen negative. My base case is that the yen stays supported in the near term because tariff uncertainty, even if reduced, is still elevated, and that tends to favor safe haven currencies.